All right, we're at noon. I don't. Is Dennis? Yeah, there's Dennis. Great. All right, and we've got 12 o'clock, so let's go ahead and get the Tuesday, May 26th of 2026 meeting started. Do a quick roll call. Aaron,
Yes, I'm here.
Mike,
I'm here.
Dennis,
I'm here.
Guy.
Here.
All right, so we've got a quorum and everyone's here. So let's go ahead and get started on the approval. I'm sorry, approve the minutes as of Monday, for Monday, April 20th, 2026. Do I have a motion to approve?
I'll motion to approve the minutes.
I second. This is Dennis.
All right, all in favor?
Aye.
Aye.
All right, moving on to the agenda here. Okay. Let's do number 3, review, discussion, and or action regarding special fund investment activity, including asset allocation targets and ranges.
Yes, as of last Friday, we were at 47, almost 48% equities, so slightly above the target of 45, and 48% fixed income, so slightly below the target of 50, but both within acceptable ranges.
All right, great. Imran, you want to take the next or do the review for us?
Yeah, absolutely. Good afternoon, everybody. We've got the usual performance report on the agenda today, and then we've got 3 different manager renewals. The GWK, which is the small cap core manager, and then the 2 fixed income would be Dolan and Arena. So I'll start with just some thoughts on markets. Obviously, very, very strong month for. In the month of April, strong returns. You had the de-escalation, if you will, the conflict in the Middle East. Oil prices, pulled back from all-time highs, and that led to kind of risk assets just repricing higher. And then you had earnings come in very, very strong across the board, particularly tech names like Google, Amazon. Their numbers came in surprised to the upside. So no surprise. You could see kind of the returns on page 2 of our deck, double-digit returns from both the large cap and small cap segment of the markets. Mid cap did fine as well, but you could see outperformance from the growth-oriented stocks, which is what you would expect, both in the large and small cap sectors. Mid cap did fine, but value outperformed there. So overall, pretty strong month for equity markets and risk assets in general. Not much different outside of the U.S. You had the weakening of the USD, and there was also a strong demand. If you look at emerging markets, up 14.7%, big number there. And it was strong demand from also tech. And that's Taiwan and some of these sort of semiconductor hardware names that were driving market returns higher there. Similar story for IFA, up almost 7.6%. So foreign equities did fine as well in that sort of market. And then moving on to fixed income, kind of muted returns there across the board outside of foreign bonds and. Kind of flattish performance there. What we did see is inflation surprise to the upside. The number came in for April, the year over year, 3.8%. So, higher than kind of what we're expecting to see. And obviously energy costs and shelters driving a lot of that. So yeah, those are some sort of quick thoughts on markets. Unless there are any questions, I'll start with the performance report. All right, so let's start on page 3. As Sylvia already pointed out, that the asset classes are within their target ranges. A little bit of an overweight to equities, offset by an underweight to both cash and fixed income. The ending market value of the special fund was $442.8 million at the end of April. You can see at the bottom of the page on the right-hand side, the investments have appreciated year to date by about $18 million, and we've had $13.6 million coming out of the account for the purchase of the building earlier this year. Moving on to performance on the next page, which is page 4. As I mentioned, strong month for the special fund, up 4.3%, which brings the year-to-date return to 4.1. You've got double-digit returns over the 1 and 3 year periods, all sort of ahead in most cases ahead of the policy benchmark. So strong performance there, and that has continued into May as well. We have an estimate through Friday up about another 1.4%, which brings the year-to-date now to 5.5%. So continuing to do well there. In terms of kind of what's been driving performance, obviously it's equities. If you look at the 4 managers here, one is the index, which is the Russell 1000 Growth Index, kind of capturing the market beta, if you will. And then you've got Prince under a little bit of underperformance during the month, and you'd sort of expect to see that given their value focus, their value tilt. GWK underperformed a little bit during the month, and that was a function of stock selection. Pear did well, up over 8%. And as you can see, the 1-year number for all 4 of these managers north of 30%, which is quite impressive. Moving on to the next page.
Ron, sorry, I have a question.
Go ahead, Mike.
I know we're going to talk about GWK later on, but it seems that they're red in every time duration, right? And I don't know if we're going to talk about this later. What kind of concerns you have with them, I guess, as managers?
Yeah, no, happy to get into that as we cover the renewal for GWK. Yeah,
Okay,
happy
cool.
to do it. No, it's at the top of my mind as well.
Thank you.
All right, going to the next page, we've got the fixed income managers, a lot more green here. So, we've got the investment grade bond folks, Reams, doing a good job, outperforming across all sort of periods here. Dolan's doing the same thing. And then Arena struggled a little bit last year because of those 2 issues, but outside of that, doing a pretty good job over the long term. So pretty good performance across the board here. Cash is at 4.2%, and I'll finish with the final page, which is page 6, which has the outflows. We had about 985,000 in outflows during the month. The investments appreciated by about $18 million, which brings the ending market value to $442.8 million. A little bit higher than that if you look at the most recent estimate that we have. Stop there, see if there are any questions, and then we can get into the manager renewals.
Any questions? All right, Imran, we can move on to the renewals.
All right. So why don't we just kick it off with GWK, just because we were talking about them a second ago. So the special fund invested with GWK back in 2019. There's about $17 million at present in this fund. We heard from them earlier on this year, as you may remember, when they came in and they talked about some of the reasons why they have underperformed. And the reasons that they have underperformed have to do with the hyperscalers, the AI names, all of the companies that drove performance last year, which they did not participate in. And so it really comes back to their discipline, which is they do not want to invest in companies that don't have earnings. And a lot of those types of names really drove markets last year. So, the view from our sort of team is that they are doing what, they say that they're going to do. There hasn't been necessarily any style drift. Most, recently they have underperformed. Obviously 2025 was a tough year for them. We'll see they're up, almost double digits now, a little bit behind the index, but, kind of hanging in there this year as some of those themes sort of continue to play out, particularly as they did in the month of April, where they lagged. And you saw kind of the AI theme return. A lot of those names, those big names, those big tech names, kind of carry the markets. And when they do that, they may not participate in that because they're more of a sort of growth at a reasonable price, type of manager, and they're looking for companies that have proven earnings. And so We keep an eye on them. They're not, very high, I'd say, on our list of, concerns. I mean, I think, we heard from them. I don't know how you all felt after that meeting, but I sort of walked away thinking that, hey, no surprises. They're telling you what they're doing and they're doing it. Is it being rewarded by the markets right now? It didn't in 2025, but I'm okay with that. But, maybe you guys have some different thoughts, Mike.
Yeah, no, that's a great point. And I quickly turned to page 8 of the packet, and it kind of goes on with what you're saying, Imran. If you look at the 10 years, 5 years they've underperformed, and 5 years they've outperformed, right? So
Yeah.
it's not all terrible if you look at it by calendar year. Plus the fact that you've mentioned here they've has 17 basis points of excess returns in the last 10 years. So
Yeah.
I can see what you're saying. Their strategy works in some years, and other years it doesn't.
Yeah. And they also talked last year, if you remember, they talked about crypto, and some of those names were really driving small cap segment. And, these are just names that it's not just them. There are a lot of other small cap managers that our clients invest with, and, they all kind of have the same headwinds when you've got that segment of the market rallying and you're just not participating in it. That's you're going to lag. But sort of on an absolute basis, I think the returns have been generally fine.
I just wish they outperformed all 10 years.
I'll work on that, Mike.
Yeah.
Okay, so just kind of going back just a little bit, I maybe I'll make this sort of quick, but yeah, we heard the history. They're Boston based. If you go back to just page 3 of this deck, I won't talk too much about it, but just, Boston based company, $2.5 billion in this strategy that the special fund is invested in. Next page 4 has the investment team. We heard from Dan Miller. He's the gentleman who came in January. He's the director of equities. This product is led by a gentleman named Jeff Theobald. He's sort of the main architect there. No changes really at the team level. Continues to be pretty steady. No changes on the following page on the investment philosophy. They're growth at a reasonable growth at a reasonable price manager. That's what they do. No changes to the investment process. We talked about performance a little bit already on page 8. I'll sort of end with page 10, which is the fee. There's 75 basis points. 75 basis points puts them in the 36th percentile. So lower the better. So they're in the top half of the universe, if you will, in terms of fees. So charging less than the market median, if you will. So like I said, I mean, I think 25 wasn't great for them, but long term, our team feels pretty good about what they do. Any questions or comments on GWK?
Nope. Thanks for the update. Yeah, I mean, I just, it's they got caught sort of empty-handed with some of the high-flying names. Like they said, don't have any earnings, but yeah, I'd hate to move on from them now, thinking that some of these names have obviously risen a little bit beyond where where not a little bit, but beyond where they should. So hopefully they'll catch up here in the outgoing years when things get a little bit more realistic with valuations. So
absolutely.
All right. Do I need to get an approval is this a 1 year, just renewing the contract for another year?
Yes.
Yeah. Okay. All right. So can I get a motion to extend the GW&K fund for another year?
I so move. This is Dennis.
I'll second that.
All right, Mike seconds. All in favor? Aye.
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 All right.
Aye.
Great. All right, Imran, you want to move on to the next one?
Yeah, let's do Arena next. So I'll start with page 2 of our document there. They were hired by the special fund back in 2018. So, you've got 8-year history with them now, about $29.4 million invested in the short duration high yield strategy there. We generally feel pretty good about them as well. They did have some challenges in performance last year, which we've discussed. The two main holdings they had, Saks and First Brands. those are the two names that were kind of, in the spotlight a little bit, and they lost some money on those two names last year. Those two credits cost them just about 5% in returns, and in their commentary they mentioned that these were sort of unforced errors, if you will, in their portfolio. But similar to GWK, the story longer term looks a lot better. Going on to the following page, page 3, just kind of a little bit of history on this firm. They're based out in LA, $4.9 billion in total assets, $3.7 billion in the strategy that is the short duration high yield strategy. In terms of the team, they've generally pretty stable. They hired one person in March of 2026. He's a senior trader. Comes from pretty good background, it looks like. So that's the recent change at the firm level there. On page 4. Page 5 just kind of talks about their investment philosophy and process on the next page, which has not changed. They're bottom up. They're looking at credit selection, so no real change there. On page 8, we've got the performance. So pretty strong performance from them, minus the 2025, where they were up 2.4%. The high yield index was up 7.9%. As I mentioned, 5% of that, those two names had cost them. And so that explained the underperformance. But I think if you look at longer term here too, sort of a similar trend. If you look at 5 years, up 6.4 versus 4.7. So they have been able to add excess returns to the overall portfolio here. And then I'll end with fees here as well on page 10. So the fees they charge are 55 basis points, which puts them in the 49th percentile. So basically right at the median of what other sort of similar managers are charging. So yeah, no real concerns with them from our standpoint. We're okay with renewing, assuming you all are as well.
Any questions? And just a little bit of background on this one. We've had Arena for long. I mean, I think we had them for many years prior to, what would you say, 19? We added them, or 18, something like that. And we basically went down in duration. So we went to the short duration fund. Back then, interest rates were basically really low, and we were scared that and it turned out right that basically rates would increase over the next year or two, and eventually they did, and so that's why we've been in the short duration. I do like the short duration just because we don't have the volatility swings as longer duration high yield, and still generates some nice income. So that's just sort of a backstory. Dennis, I think you might have been, I don't know if you were around at that point or not. No? Okay. So yeah, it just would have been Imran and myself, I guess, and some of the other people was on the call as well. But that was sort of the thought process of going to that short duration fund rather than the normal duration high yield fund that we were in for a fair amount of time. So, and with that, do we have a motion to extend Arena Capital for another year?
I'll make the motion to extend Arena Capital another year.
Second. I'll second. All in favor?
Aye.
Aye. All right, great. And then I think the final one, right?
Yep. So Dolan is the final one that we've got on the docket today. I'll start on page 2 of the deck there. So this is another sort of longer tenured manager with being hired back in 2011. At the moment, $57.7 million is what the special fund has invested with Dolan. And as we looked at the performance, a little bit ago, their performance has been very good. We don't have any material concerns around, the program there. I think they do a pretty good job. This is the strategy, just as a reminder, this is more sort of corporate focused strategy. So the recommendation from our team is to, when clients are using a manager like this, to pair them with somebody that does have exposure to mortgages and treasuries, which this manager does not offer. So we have that with Reams, so we're covered there. But speaking of Dolan themselves, I think they do a pretty good job, and we feel pretty comfortable with what they're doing there. Next page. So we've got just a history on them. They're more of a boutique shop, similar to Arena. They do manage about $14 billion in assets. $485 million of that is in the the core composite, which is where the account here falls. So, you know, smallish firm based out of Chicago. In terms of the investment team, the two gentlemen, Dan Dolan and Roger McInerney, whose names are on the door, they're very, very focused on the firm. They're sort of the main decision makers, if you will. Smaller team, but you know they work well together, and they've been able to put together a decent track record. In terms of the philosophy and process, no change from the no change from last time. Similar to similar arena. They are also bottom up sort of credit selection, research focused shop. 40 to 60 names in this portfolio, and that has always been the case. If you look at the performance on page 8, pretty strong performance. They're consistent across the board over 10 years. Offered excess returns over the AG, 3.44 versus 1.7 over 5 years, 2% versus for the AG 0.3%. So performance has been fine for them as well. And I'll just sort of end with performance or fees there as well, which is on page 11. So in this case here, separately managed account at Northern Trust, and their fees at 25 basis points. 25 basis points puts them in the 42nd percentile. So also above the sort of median. So they're on the lower end of the universe. So no concerns around performance. They're not charging more than the market. They're charging less, in fact. So, and performance is fine. No real issues at the personnel level. So we feel pretty good about them as well.
All right. Any questions on Dolan? All right. Not seeing any. Do I have a motion to extend Dolan McInerney? Yeah. However you say that, for another year.
So moved.
All second. All in favor?
Aye.
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 All right. So we have that. All right. Next on Imran, I think you're free to go.
Good deal.
Thank you for the report you put together. Good stuff.
Thank you, everyone.
Appreciate it.
Absolutely. Catch you all later. Have a good week.
All right.
Take care, Emma.
Bye. All right, we'll move on to number 4, review, discussion, and/or action regarding special fund investments where original cost exceeds current market value by 25% or greater.
So it's a very long report again, 105 items on the report, but 92 are in the index fund.
Okay.
The others there are 11 for GW&K and 2 for DRZ, and you should have reports for those.
All right, any questions on those? All right, we'll move on to number 5 then, discussion and action regarding potential new property in Tucson.
I think this is just carried over.
Carried over, so we
Yeah.
don't. All right, great. All right, and then I think we got everything. So we want to do the scheduling for next month's meeting.
Yeah, how does the 29th work for everyone?
So that would be June 29th. Ooh, that's not good for me. I'm on vacation that week.
Yeah. I'm out of town at a conference next week, or that 29th.
Yeah. Let's see here. Would getting the reports done be too early, like for the 22nd or the 23rd?
We should be ready by then.
How does the 22nd or the 23rd at 1 o'clock look for everyone?
23rd will be better for me. I mean,
20
the 22nd.
22nd? All right. That work for
Anything
you,
that will
Mike?
be at a meeting on June 23rd, the same one.
Okay.
Right.
All right. So Aaron, how does that work for you?
That works okay for me.
All right. So at 1 o'clock on Monday, June 22nd.
That was great.
All right. And with that, we will end the meeting. Got a lot done today in our 24 minutes together. So well done. And we'll see everyone next month. Stay cool out there.
Thank you, guys.
Take care.
Yeah.
Bye.
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 Thank you.
Bye-bye.